Hello everyone, it's me Indralal Shrestha, and today I am along with my team member Siris Kesi, Akash Kumar Rauniar and Prakash Bora. Will be presenting about the investment analysis report on the Austral Gold Limited. Let's talk about the company overview. The company was initially founded in 1996 and it was established in Sydney, Australia. It was established for the future involvement in the precious metal industry. And in 2006 the company goes to the public and it was becoming access to the every public investor on the American focused precious metal operations. In current scenario it is led by CEO Starbo Kansvia. It is mainly focused on the gold and silver operations across Latin America in the different strategic locations. For the next part I'm going to call to the Akash Kumar Raunia.
Now I'm going to present on Australian Gold Limited financial analysis. This report examines Austral Gold Limited financial performance over 2023 and 2024, analyzing the key financial metrics like major assets and liability and further outlook. We are going to explore the significant increase in losses and identifying the potential opportunities for recovery. Our analysis cover profitable ratio, debt structure and asset performance, and to provide a comprehensive understanding of the company financial health and trajectory. Next slide please. Thank you, Indra. Let's take a look on Austral Gold financial performance over 2023 and 2024. In 2023, the company earned approximately 47.7 million in sales revenue and had a net loss of 7.2 million. But in 2024, both revenue and profit declined further. Sale dropped to 36.8 million and the net loss wiped out drastically to 27 million. This step loss is mainly due to the major impairment losses, over 16 million in the property, plants and equipment and almost 9 million in explosion assets. These impairment charges reflect a decline of asset value, meaning the company had to write down underperforming and devalued project. Thank you. And now I am going to call Srisa.
Now I will talk about profitability analysis of Austral Gold Limited. As we can see in the slide, in 2023, the gross profit margin rate was 1.1% and it was changed to 9.6% in 2024. So there was an increase in gross profit margin of the company. However, the net profit margin went down in both the years and it was changed by 0.584. Despite an improvement in gross profit margin, Austral Gold experienced significant loss in its net profit margin and return on assets. The company's assets are generating lower returns and shareholders continue to face increasing losses, which is evident by the declining earnings per share. Now I would like to move to the next slide. So talking about the major assets of the company in the year 2024, mining properties were valued at 1.3 million and this asset had a significant decrease from the year 2024. It had a 77.7% reduction in its value, which is critical asset for a gold mining company. The next main asset of the company was property, plant and equipment, and this asset also had a decreasing value in year 2024, possibly due to outdated equipment or increased maintenance cost. Similarly, the next asset was exploration and evaluation. Again, this asset also had a reducing value from 2023, indicating potential loss in mining site valuation. Now I will talk about the main liability of Austral Gold Limited. Its main liability was loans and borrowings in the year 2024, which was valued, which increased from 2.5 million in 2023, which shows reliance on debt financing. Its borrowings in 2024 represented 17.4% to its assets, which is significantly concerning for the company. Now I will move to the another slide. While the shareholder has remained stable, its equity has been stable since 2023. However, we can see the accumulated loss has a significant increase in the year 2024. Talking about the accumulated loss, it was 93.6 93 million in 2024. This is 40.7% increase in accumulated losses, which significantly impacts the overall equity position of the company, and it raises concern about the long-term sustainability without major operational changes. The growing accumulated losses represent the compounding effect of consecutive years of negative performance, creating an increasingly challenging position for recovery of the company in the future. Thank you. Now I would like to call Prakash for the next.
Thank you, Shiris. In this slide, we highlight the main financial challenges Austral Gold faces in 2024. Firstly, the company records significant asset totaling over 25 million. This mainly came from the devaluation of the property, plant, equipment, and exploration assets. Secondly, there was a 22.9% drop in the sales revenue, or decrease of nearly 11 million, which severely impact cash flow. To compensate for the cash shortfall, the company increased its borrowing by over 17 millions, indicating a growing resilience on debt financing. As a result, net loss dramatically increased by over 273% compared to the previous year. These factors are all interconnected. Lower revenue, high impairment, and increased debt has created negative financial cycle that the company must break. Next slide. Talking about next slide, despite the challenges, there are several opportunities for the recovery, for the future outlook and opportunity. Firstly, accumulated tax loss may be used to reduce the future tax liability, creating some financial breathing room. Secondly, if global gold price rise, which is likely during the economic uncertainty, Austral Gold could see a strong boost in the revenue. Thirdly, the company must focus on the cost control, especially reducing losses from asset and cutting down the exploration cost. Lastly, improving optional efficiencies such as streamlining administrative expenses and optimizing mining operations can lead to the long-term profitability. In short, recovering is possible, but it requires strategic cost management and better operational practices. Next slide. To conclude, Austral Gold is currently facing a tough financial situation with high losses and rising debt. However, with the right strategy in place, including cost reduction. Thank you.